Let's find out what this all means for the markets. Kari Firestone is here. She's the chairman and CEO and co-founder of Arias Asset Management. She's also a CNBC contributor. And Kari, I know you're watching the labor market, but I think that was number 2 in the list of things you're looking. You're waiting for the CPI even more. You're even more focused on that number.
Oh, hi, Becky. It's nice to see you. And yes, it's so important what that CPI number is because it's really driving the market. I mean, you saw the market surged when there was a suggestion that Jay Powell made that inflation was really coming down. He used the word disinflation a few times. We saw that jump in January, and then February, people got very disenchanted when it was clear that he said inflation was sticky, and we saw that CPI number not budge as much as expected. So, a piece of news such as, rents are coming down 3.5% over the last 6 months, that I think is indicative of an effect on the housing and rent market. We know that new mortgages, I think, are at the lowest level since 1995. Again, that would point toward lower inflation numbers, but housing, it isn't all of it. It's a big piece. Food is major, and we all know how those food prices are going up. Labor prices have to start to ease. So I know Joe mentioned, the bad news can be good news. I think that the labor market is still growing. It's just the extent to which it pushes up wages, and that is driving the market. That is what the market is thinking about and worrying about right now.
All right, Dow futures are up by 100 points right now, but really that's completely because of Salesforce. It'd be down without it. I think Salesforce is adding about 175 points to the Dow futures this morning. I think the big concern is what's happening with yields on treasuries. And you're talking about the 10-year back above 4%. Does that change your outlook on anything that you're investing in, Kari?
Not really. The yields on treasuries were, as Steve pointed out, seemed artificially low considering where we were at the Fed level. I think it's about how many more rate increases. And we know that even if the Fed raises 25 basis points 3 more times, and I think that would be consensus perhaps right now, they are most of the way there. Think of all those 75 basis point increases, where we are now versus where we are when we were basically at 0. So we're most of the way there. And that's how we're thinking about, interest rates and yields. What I guess the most interesting factor for people who are managing money to think about is where you say to a client, perhaps, yield looking at a treasury makes some sense where 2 years ago, it certainly didn't if you were thinking about where you're going to get return relative to the stock market. So that plays as an option that we have in mind and have in our possibilities. But
you're talking about the short end of the curve, like the 2-year at 4.8%.
2 years to 5, right?
Yeah,
that's major compared to 1%. So but I think what we're also seeing in the market is. If we see more indications like Salesforce, where you have a company that has a lot of leverage, think about the amount of leverage they had to quickly move those numbers as fast and as high as they are relative to expectations. EBIT, earning before interest and taxes, was up 103%. That was about 40% higher than expectations. And it isn't just, of course, it's a factor that activists have been putting pressure on Benioff, but they had the levers to do that, which just is pretty outstanding and amazing in this environment for a company that big to be able to, over, the last 6 months put in place both cost cutting, but also billings were stronger than expected. They were in the low teens. So that was pretty impressive and shows that the software recession, and I think recession has been in a software to some extent for those big companies. Maybe we're coming out of that.
That's an
and
interesting
these
point.
Recessions, maybe ending for some.
We'll see. We'll see if that carries out with some of the other companies too. But Kari, thank you very much.
Thank you, Becky.